Hello and welcome back to the Macro Gamer channel. My name is Mark Hassingham, and today we're going to go through week 7 of my portfolio update. Normally I release this on either Friday night or Saturday morning, but I was on vacation over the weekend, so this is actually going to be Monday today, September 9th, 2024. So the numbers will be just slightly off by a day, but overall it's going to be the same repetitive thing every single week, so it won't make too much of a difference. So let's get into the slide deck. So as I said, we're on week 7. So our portfolio net worth, pardon me, is $160.28. Now remember, every week we auto deposit $10 into the account, just straight over a paycheck. And then once the account reaches $25 in the cash account, it deposits it into the portfolio and invests it based on your weighting. So we're going to go over those weightings in a second. But right now you're going to see a jump of another $30. So about 3 weeks ago, we saw a jump from about $100 to 130. And now we're seeing about 130 to 160. So about every third week, you'll kind of see that jump. Those $10 stack up, and then they get deposited into the portfolio. So here we are, week 7. We have our chart here, pretty flat as usual. We have our money weighted return down 0.03%. And we have our net cash flow of $31.38. This is what I'm talking about. So this is cash coming into it. This isn't our portfolio's performance. This is the cash coming into it. Our performance is right down here in the lower right, which is this down 0.03%. So our market gain is 0.38 cents. And it's a little hard to see, but you kind of see you have your 100 line right here, and you have your 150 line right here, and it jumped from about midway to above it. So that's that $30 increase. So you're going to see like a 30% increase on the portfolio. So you see starting value of September 3rd was $128.52, and ending value today, September 9th, is $160.28. So again, that's just cash coming into the portfolio. Now this is our weekly data return. Let's look at our monthly. So you see these two jumps right here. So this is the first $30 increase. So you see a 30% here, where we went from 100 to about 130. And then over here, we see now our second $30 increase. So we see from 130 to about 160. Again, this is just cash going into the portfolio. You see right here, net cash flow. All right, so it's just cash coming into the portfolio. Our actual performance on our portfolio is right here, our money weighted return, which is 1.06%. We're positive 1.06%. So we have a market gain of 94 cents. So if we go back far enough, since this is a monthly chart, we see go back to August 9th, we were at that $98.47. And now our ending value on September 9th, 1 month, is $160.28. So you see about 60 bucks was added in cash, and our market gain portfolio was about 94 cents. And we had a dividend of 46 cents. Okay, so this is our monthly data. So whenever you see these big jumps like this, just keep that in mind. As our dates get out longer and longer, the curve will look a little smoother and won't have these big jumps like this. So this is our week 7 portfolio percentages. So at the top, we have our government bonds, which now we've increased to 30%. So remember, a few weeks ago, we were slowly increasing it up from like, I think 15%, and we worked its way up. So now we're at 30% in our bonds position. We are up 1.47% for the week, and that's a gain of 66 cents. We have our gold position still at 30%. See over here on the right. Gold is up 0.24% for a gain of 11 cents. Pardon me. We have our UUP, which is our US dollar ETF, at 15% of our portfolio allocation. We're up 0.09%, which is a gain of 2 cents. We have our commodities index, which we're at 10% of our allocation. And remember, when we first started out, we were at 20%. So we basically cut that in half. We reduced it because commodities and inflation is coming down. And you can see that reflected in the price as we're down 2.55% in that position, or minus 39 cents. Our RSP, which is our equal weight S&P 500 ETF, which is at 10% allocation, we're down 2.10%, or minus 32 cents. And our Bitcoin ETF, which used to be BITO, we switched to the IBIT, the iShares Bitcoin. That's when I was talking about the correlation between the BITO ETF and Bitcoin price. It was losing correlation, it's getting separated, and we'll go over a chart on that. But I wanted to let everybody know I switched. It's still Bitcoin ETF, it's just a different Bitcoin ETF. The correlation is better with this ETF, so that's why I chose it. But anyway, the Bitcoin ETF is down 1.10%, or for market gain of 0.09 cents. Now, the next chart will be our monthly. You see at the bottom, it still says that 1.10 for Bitcoin. That's because we just added in this IBIT. So we're not going to have a month's worth of data for this. We only have that week. So just keep that in mind. So here our government at the top. We're up 1.95%, or gain of 72 cents. Gold, we're up 2.97%, or a gain of $1.17. US dollar ETF, we're down 1.20%, or a loss of 28 cents. Our US commodities ETF, we're down 1.57%, or a loss of 21 cents. Our equal weight S&P 500 ETF, we're up 2.69%, or a gain of 35 cents. And again, the IBIT is going to be the exact same as the previous week, because we've only have a week's worth of data. So it won't give me that month's worth of data, which is fine. So this is our monthly return. Now here's our portfolio transactions. So here's the transaction for the Bitcoin ETF. So we sold our BITO ETF, or Bitcoin strategy, for $5.10. And then we bought the IBIT, the iShares Bitcoin Trust ETF for $5.15. So we just switched from one Bitcoin ETF to the other because I like the correlation on the IBIT better than the BITO ETF. So that's just a swap. Same asset class, which is Bitcoin, just a different ETF that's tracking it because the price tracking is better. And then we have our $30 or $31.38 that we auto deposited into the account. So this got spread across all 6 of our assets. So our RSP, which is our equal weight S&P 500, gained $2.99. Our UUP, which is a US dollar, gained $4.15. Our government bonds, which is a 30% of our position, gained $8.72. Our gold, which is also 30% of our portfolio, gained $9.22. Our commodities ETF gained $3.30, and our Bitcoin ETF gained $3. So this was a deposit of the $30. Remember, $10 every week. Once you get past that $25 cash holding, it deposits it into the portfolio and spreads it across the ETFs how you have it based on your allocation. So since bonds and gold are both at 30%, at the highest, they got the most. And remember, 60% of our portfolio right now is bonds and gold. So we're being more cautious in our portfolio. So now we have our Illuvium staking dashboard. So as of recording today, the Illuvium price is $38.07. So it's still kind of coming down under $40. Our Illuvium total ILV coins is $2.11 ILV tokens for a cash value of $8.41. We have our vesting, so we still have our 2 vesting. We got our first one that we started on July 27th, 2024, and it will unlock in 321 days for 1.32 ILV. And then we have our second one, which we locked up more recently, our 0.79 ILV, which is about $40 at the time of that purchase. We locked it up on August 24th, and it'll unlock in 348 days. So remember, about every month, we're going to add another lockup and another lockup and another lockup. And that's going to increase how much we can get for revenue distribution. Our current revenue distribution right now is 0. So we've only gotten that first one so far. We haven't gotten any new ones. So we're going to keep watching this. But right now it is at 0. Any that we do get, we will claim. And then the next time we make a new stake or vesting, or we add another one of these, we're just going to take that and just reinvest it. So the goal is to basically reinvest, because we want to increase our revenue distribution of how much we can get from the company. Because remember, it's a studio paying out to the token holders. And that's all we have for our weekly numbers. So now we can get into our charts. So as usual, we'll look at our 1-year chart. So we got our gold chart, which is still our best performing ETF, all the way back here to October 23. Still in this great uptrend. You know, like I keep saying every week, there's no reason at the moment to want to sell gold. In the future, if that changes, you know, that's fine. But it's had an uptrend close to a year now, So there's no reason to sell this trend. It's just continuing up. It's doing great. this is what we want. So this has by far been our best performing asset. My personal portfolio, where I've been doing this portfolio a lot longer, it's also been my best performing asset going all the way back to October. We have government bonds, which is our second best performing asset at the moment. And as you can see, we were in this wedge pattern here. And then it consolidated. And right here around July, it popped up, right? And then it came down and it started going up and up and up. So this is the other 30% position. So 60%, remember, in these two positions, gold and bonds. So right now, this position is doing really good at the moment, right? And the reason why I increased my position to bonds is because Jerome Powell, the Federal Reserve Chair, signaled that he was going to start cutting rates. He hasn't yet, but that may happen. I don't know. We're going to see. But if it does, it's likely only going to be a little bit at a time. It's not going to be a big, cut, but we're going to see what happens. But usually bonds are inverse to their yields. So if they're bringing the yield down, if they're cutting rates, that means the bonds can go up. And if they're raising rates or raising the yields, that means bonds will go down. So I'm thinking, everyone's thinking, the rates are going to come down, so bonds are probably going to go up. And again, if you look at it on a 5-year chart, I keep bringing this up, but it's been on a huge downtrend going back all the way to 2020, basically when the pandemic started. And then it looks like we might be bottoming around here and coming back up. So I'm just thinking that this would be a good time. We have our US dollar ETF, so it also came to this wedge pattern, but then right here around that August timeframe, it started breaking down. So that's why we reduced our dollar position, because it's been coming down. So it broke out of this little wedge. We have our commodities ETF, which was in an uptrend starting back here in December, and then it broke out of it in July. So we were previously around 20% of our allocation. We brought it down to 10%. And as you can see, it's been breaking down. And just this more recently, looks like the end of August, beginning of September, it's been coming down still. So it's a good thing we reduced that position. Our equal weight commodities ETF, going back to October, looks like it bottomed here, then it's coming back up. Still in a good uptrend. It looks like it broke down a little bit here and it came back up in this little V pattern you got going on. And it's starting to come back down a little bit, but still within this trend. So we're just watching it. Still skeptical on stocks. I'm not putting too much in it, which is fine. And then we have our IBIT, which we only have less than 1 year's worth of data. But you can see right here back in March of 2024, it's been trending downwards. So we really peaked maybe like March 13th, somewhere around there, and it's just been coming down. So Bitcoin's only at 5% of our portfolio, so it's fine. So I'm not too worried about it. But keeping in mind that if I'm not as invested in stocks on this time frame, I'm probably not going to invest in Bitcoin because they kind of trade together a little bit. They're not the exact same, but usually when people are more bullish on stocks, they're also bullish on crypto. So that's kind of just where we're at with that. And you have less than a year's worth of data because this Bitcoin ETF is still new, relatively new. But that's all I have for this week. Again, sorry for the delay. Normally, like I said, I'll do this Friday evening or Saturday morning. Like I said, I was on vacation, so this is coming out Monday. So the numbers are off just slightly. Instead of a Monday to Friday schedule, this one was basically like a Tuesday to Monday kind of thing. But that's fine. Going forward, it's going to continue to be the same unless like I'm out of town or something like that. But as always, if you have any questions, concerns, or comments, let me know. And thank you for watching.